have the 2-year at 2%. The imbalance here is why the 30-year or the 10s are trading at such a low price. And that's because of the fact that you have inflation fears, and people are buying bonds, and even though short-term yields are higher as a safety net. That's where we're at. Let's see what happens. All right, so we have a small, kind of a small, anything with inflation is not a small number, so we got to keep that in mind. So we'll see where that happens. Next resistance area is up at the 72 area. They slivered up to 69 and change up here. So we're looking at 72 as our next level of resistance. See where they go from there. Market very, very a little choppy, a little also range bound, as you can see here. Again, not surprising. I don't really expect much this morning, considering what's not going to happen. So we shall see. Fed day today finally has arrived. Investors and economists alike have set a reminder for 1 o'clock today, and when the central bank would release details of its latest rate decision, and another alarm for 1:30 when Fed Powell takes the podium. They'll be watching updated interest rates and economic projections, which will largely define trader behavior and sentiment as the market heads into 2023. The time for moderating the pace of rate increases may come as soon as the December meeting, said Powell in his latest media appearance a couple weeks ago, and it looks like now a reality. Of the 100 responders received following yesterday's softer CPI print, 95% are now predicting a 50 basis points hike, and only 5% think that the Fed will go 75 basis points. It is a notable change from a day earlier. Prior to the latest inflation figures, 2/3 of the 2,100 surveying participants felt that the central bank will set to announce a 0.5 point increase, compared to 1/3 going through its fifth 75 basis point hike. That was prior to yesterday's, and just a survey, not anything solid. But anytime you get a survey from 2,100 analysts, you might as well put in these guys don't know nothing. We don't know nothing. Nobody knows nothing. All in all, the Fed has cranked up its key rate by 375 basis points in the last year, from a near zero level that have been in place over 2020 and 2021. The key rate, formerly known as the federal funds rate, is closely watched because it influences interest rates throughout the economy. For consumers, rising interest rates make it more expensive to take out mortgages, carry credit card balances, and get a loan to buy a car. For businesses, it increases the cost of bank loans and raising capital in the debt market. Following the 50 basis point hike today, Hank Smith, head of investor strategy at some trust fund, sees a 25% rate increase in February and possibly another 1/4 point in March. Then we're going to have a pause and allow the lag effect of this monetary tightening to play through, he said in an interview. The Fed will also be careful not to call it a pivot, and whatever the terminal rate is, whether it's 5.5 or 1/4, it's going to stay there for a period of time, or likely through 2023. As for how the Fed policy will affect investing, They expect continuing volatility in equities and fixed income markets, given the outlook for mild and brief recession in the middle of next year. Again, the call for that recession is definitely from the market price action and the bond market. All right, there are the levels again for those of you who might have just missed them. So got resistance up here at 72. That's our next level of resistance that we're looking at. We have Atlanta Fed inflation expectation index coming out here at the top of the hour. So like I said before, anything with inflation is always something to look out for. Let's see. Customers breathed a sigh of relief on Tuesday as inflation showed further signs this was citing in November. The three major U.S. equity indexes jumped following the release before pairing much of the big gains during the session, while the 10-year Treasury yields were pushed back down to a level of 3.5%. Make no mistake, prices are still too high. Biden said in a statement, but things are getting better, heading in the right direction. Consumer price index rose 7.1% versus the expected 7.3%. The marked the fifth straight decrease since June. It is also the smallest annual increase in inflation rate in more than a year, indicating that Fed aggressive rate hike moves are filtering through the economy to reduce demand. Meanwhile, core CPI climbed 6% versus 6.1 expected, as shelter and large contributors to the CPI more than offset decreases in the energy index. As I had been expecting, we are finally seeing a more precipitous decline in both headline and core inflation rates, as both the monthly and the annual rates are reported below expectations. Said some analysts, the decline in transportation services and medical care are encouraging, while shelter costs should follow early next year. Shelter costs, I'm assuming, would be rents. The report suggests that we're on the road to a soft landing, said some other analysts. The Fed will keep talking tough and probably inch up the dot plot, but we seem to have turned the corner on inflation. Santa will be coming to town this year. Okay, Santa. Again, 72, next little area of resistance that we have. We have a number coming out here at 9 o'clock. At 62, depending on how you got in there, should give us a quick little opportunity. And now we're just kind of hanging here. So again, the Atlanta Fed expectation, business expectation index, and then really nothing until the FOMC, which again, that's a big deal, and they're probably going to be range bound, I would think. Can't imagine them making any kind of move prior to the expected announcement of a 50 basis point hike. I guess the statement is going to be what they're going to be looking at. All right, well, we couldn't get up to 72, just snitched up to the 69 area, and now we're just kind of hanging here. Let's see here, what else can we talk about? Cancer. Moderna was one of the most active stocks during the session on Tuesday, staging a massive rally in response to promising developments. Shares soared nearly 20% as an experimental melanoma vaccine combined with Merck cancer treatment, Keytruda, cut the risk of skin cancer reoccurrence by or death by 44%. Wow, that's impressive. That compared to a treatment of only Keytruda that took place in the phase 2B study called Keynote 942, which while preparations to launch the first phase 3 trials are already on the way. That's very nice. Cancer sucks. All right, coming back up here to the highs, we're looking at the 72 area. Moderna, which rose to fame and fortune on backs of the Moderna COVID-19 vaccine, has shown that the Moderna technology is not a mere one-trick pony battling coronavirus, but could be disruptors in the cancer space as well. The news can continue to provide much-needed boost for biotech, which is down around 16% year to date as we come up here to the 72 area. Again, whatever we do, we keep our stops in place, right? Because that's what we do. We do. Well, got up to 70 and change there. Trying to get up here to 72 here. Remember, we're on the same bar, so. All right, inching our way up here to the 72 area. All right, working the 72 area right now. All right, nice little rotation there against the 72. Got you filled on the upper end of your entry point there, hopefully. Got up to 375 there and then popping back down here. So a nice little trade there. That was a nice little trade to get us both ends of our entry points. Depending on how you scaled in, even if you just scaled in at 73, you did okay. So, I mean, 72. And then nice little rotation off of that uh, level. So hopefully we were able to take advantage of that area that we had up there. That was perfect. Yeah, it's perfect in many ways. Got filled on both ends and then decided to come down for us. Sometimes it's nice when it works out that way, where we don't have to work it too much. Can we repeat the levels one more time in the chat? Thanks. Anytime you get a big day like yesterday, you always got to be a little bit mindful of the volatility. you're going to get opportunity, obviously, but you have to also be careful. There is something to be said about opening way, way up or way, way down, right? Um, to get the initial rotation, could go either way. You could be either getting people who were short getting stopped out, and you get the initial rally, or people who are just going to take their profits and then they're going to sell it off. So it's a 50-50 chance, but you're definitely going to get volatility in that somehow, some way, and you got to be a little bit careful trading. So, and that could happen with any time you get such a you open up 100. Well, the high from the close was like 160 points. Only open up 4% higher, right? I mean, you're going to get some profit taking at some point. But again, it's one of those things where I don't like to have an opinion, even though I'm leaning towards, wanting to sell it off a little bit. I didn't know it was going to come all the way back. That's for sure. And it was, you were still getting some big uh, ebbs and flows in the middle of that. So tough trade yesterday. Absolutely, it was a tough trade. I tried to stay out of it, of course, no matter what you do. You always try to find the one spot. Okay, well, I think this is really good, and then you kind of run through it a little bit. So you have to be. Yeah, I tried to pick my spots and still lost money, but it was a tough day. Not easy. But the key yesterday, especially, and then the other problem we have with yesterday's trade was the time of the year, right? That's the other problem, is that December light volume, even though yesterday's volume was huge, but you still is not. This time of the year is very tough to trade, unless there's some geopolitical situation or like yesterday, the announcement, and then there's going to be a big announcement today. You're going to have the same kind of situation later on this afternoon. You're going to get some crazy moves. You got to be careful. And that's why we got to, when you get the craziness, you got to be, as a trader, you have to know when to trade. And that's one of the times where you have to say to yourself, okay, there's always going to be tomorrow. Let's just pick your spots, take one or two trades, and you want to get involved, but it's very tough, or you you're going to end up over trading, right? So you got to be a little bit careful of those kind of big days, as we do have a small number coming out here at 9 o'clock. Could create some volatility because inflation's attached to it. So be careful here. It's going to be released here in about a couple minutes. All right, let me continue to uptick. We got a number coming out here momentarily, so be a little bit careful. I don't know if it's going to create some volatility or not, but it just inflation's attached to that number, so we have to be a little bit mindful of it. Not so much so. The market they haven't really cleared the ladder ticket so much. So all right, numbers out. And the next level of resistance we have is up at the 83 area. Again, if anybody has any questions, feel free to ask in the chat. We are trading mini S&Ps here, looking for opportunities to scalp the market based on the levels we gave out. The next level that we have is resistance is up at 83. So we can see here we have a very big dominating bar. If you look at a daily up from 4180 on the upside, all the way down to 4026 area on the downside, 26, 20, yeah. And again, it basically just closed the gap from the day before. So technically, good little close of the gap. But we'll see now. So it's 40, let's say 4020, just to make it easier for us. 4020 on the upside, on the downside, and then 4180 on the upside. And basically, yeah, that's a big 160 point move. That's like 4%, right? That's where we end up. When we open up, or the market rallies 4%. That's a ridiculous number, right? And then they kind of sold it off. And so now again, I think we were talking about the 4080 getting to be bullish. And obviously, if we closed up in that range, we would have been okay, but we didn't. We came and sold off. 4080 gets us into bullish territory, but that was for the SEP contract. Now that we're in the March and there was like 30 points, we got to get that like the close of a 4120 area. Then we start to negotiate or start talking about we're in a bullish market. I think you're going to get more talk about that. I don't know. So we're on the cusp of it, 1 or 2 40 basis points, 40 points, I mean. So we're right about there, 40, 50 basis points. So that's where we're at as far as getting this market to start people's out. We're in a bullish market. Might not feel that way, but we're definitely off the lows. And obviously, if we closed anywhere close to yesterday's high, we would, have been there. We'll see what the Fed does today and how they react to it. How they're going to react to the press conference and what he says going forward. It's going to kind of dictate the trade going into next year. I don't know if they're going to have too much trade coming out of after tomorrow, after today's reaction, and tomorrow maybe a little reaction to today's to what he says today. It's going to be pretty quiet to get to that week before Christmas, and then between Christmas and New Year's. Probably going to be extremely quiet. The days after on Mondays, the markets will be closed. So, we're going to have definitely short weeks for sure. And definitely the week between Christmas and New Year's is going to be kind of almost dead. And we'll see what our schedule is going to be during that time. Thanks, Don, for the picture of the poinsettia. Is very beautiful. While they were there. All right. We're just kind of hanging up here on these highs here. We're looking at the 83 next level upside. All right, then. Just get it fixed up, man. You are the computer whiz around here, so if there's anybody that can fix up a messed up computer, it's you. Did you try turning it on, turning it on and off? That's my only solution I can help you with. It's the only thing I know what to do when my computer goes blank on me. I'm like, I'll just turn it on and off.
Yeah, I've tried that. I've kicked it, I've spit at it, I've cussed it, I've done a little bit of everything.
Yeah.
This is a ninja problem. I updated, and I shouldn't have.
Right? Yeah. Sometimes those updates could kill you.
Yeah.
You know, that's true. Yeah, I know. I don't know. What can I tell you?
You know, the charts come up and everything, and all of a sudden I got a big gap from 3 o'clock to whenever I turn my computer on. I'm going, where's the data for that?
Mm-hmm.
Going,
Well, where is it?
I have no idea. I have changed. I have done everything. So my next thing is get rid of this program and reload my old one back on and start from scratch.
Wow.
I know the old one works.
Yeah, I mean, maybe you could just leave your computer on all night.
Yeah, just let it run solid.
Right. I mean, it'll just pick up the data, right? I don't know.
Well,
Maybe
it's I've done everything Ninja said, and finally, you know, after conversing with them, I just finally called them. I said, "Have somebody call me."
Mm-hmm. Well, hopefully you get it back working.
If I don't, I will shoot it.
Well, yeah, I mean, I figure you're going to just buy a new one. So that's what my other alternative is. Just buy a new computer.
Well, that's, you know, I've been looking at building another one anyway. So, but it's
right.
It's not the computer problem.
No, right. It's not. That's the thing.
Software problem.
Yeah, right. I know you're going to have the same problem with the next computer anyway. So
I'm just going back to the older version, and not unless they can figure out how to make this one work. This latest, you know, everybody wants the latest bells and whistles, but sometimes the bells and whistles cause nothing but headaches.
absolutely, because they're not adapted. They're not adaptable with the program that you have on now. They need you have to update your computer to be able to handle new bells and whistles.
Yeah,
and that's a problem.
You know, it kills me. I go to the lawnmower place to get parts, and I'm talking with the guys there, and they're telling me about they have to have a laptop now to work on a lawnmower. I'm going, you got to be joking.
You mean when they fix it?
Yeah, when the new engines are electronic fuel injected, and they actually have to plug in a laptop like you do an automobile to test it and see what's going on.
Right. Well, those little chips, man. Those little chips can control everything.
They even have chips in new chainsaws.
Oh, really?
Yeah. I'm
Who
going,
would have thunk?
not me. I says, I'm rebuilding my old stuff.
I know, right? It's crazy. Absolutely crazy. Soon they're gonna be putting chips in us.
It's not the mechanical part that's the pain in the neck. It's all the tool. You got to have a $1,500 laptop, probably $2,000 now, just to run the program to fix your deal.
Right.
It's kind of like, no, it don't work.
Yeah, they got you coming and going, those guys.
Yep.
Brutal. Oh, I love the picture of the poinsettias.
Yeah, it's coming and going for some reason. It's computer problems this morning.
Yeah, that's okay. It's excusable. Don't worry about it then. But it's a pretty picture for this time of the year. If Brett can figure out something to put up there instead of his mug, it'll be perfect.
Maybe I'll send him a picture of a poinsettia.
Yeah, that's right. Let him put that up there for the season. So you didn't trade yesterday?
Uh-uh.
Oh, wow. I figured you were short, sold it off, and then just walked away because you left a little early.
I'm going, come on, guys.
Yeah, that sucks. It opens up. I'm like, how is it opening up 4% higher? I'm like, geez, and I'm like, you got to sell this off, right? And but I hate coming in with an opinion, But
I know, but I looked over there and I says, what, 24? No, it's up 124. But what in the world?
It was up 160.
Oh, was it?
Yeah.
I just looked over at the dome and saw 124, and I'm going, my goodness, they lost their ever-loving minds.
Yeah, but it's amazing how they went right down to the low, from the high from the day before and yesterday. That was yesterday. They closed the gap perfectly.
Did they?
Perfectly. Pretty amazing.
I couldn't even tell the gap. I mean, I had a big gap from 3:00 till 9 in the morning.
Yeah, you did.
I'm going, I don't even know where to even start.
Right. Oh, that's terrible. Yeah, that is not good. That's not good. Yeah, you can't do you can't work if you can't get to some information from 3:00 to 9:00.
Well, then I got to thinking. I said, it's closing this big old gap here. I just wonder if that's a thing I ought to be looking at from that time frame to the other time frame, and every day it's going to close that big old gap.
Yeah. Well, I was going to mention the gap yesterday during the day, and I forgot. It was one of the things I was thinking about mentioning, and I said, "Well, the market can't go up unless we close that gap." And I forgot to say it, and then I left. I came back and I saw that it went all the way down to the gap. I'm like, oh, wow, look at it. Pretty amazing. It's pretty amazing how they went all the way down to the end the same day from 4%. They broke it off 4%. That's such a big move.
But the day before that, it seems like every time it would drop down, they just had big lots just piling them in there.
Mm-hmm.
And they wouldn't let it rotate.
Yeah. Well, yeah. I mean, they did that yesterday too. It was just sell. Every time they made a move back up, the selling came in. It's pretty amazing sometimes how these markets work.
If we could just get on the right side of these puppies.
Right. If we just had tomorrow's paper today, could you imagine especially after yesterday, we'd be done for a couple of years.
We can make a living with one lot.
No, we'd retire after yesterday. I mean, think about it. Yesterday was retirement day if we had yesterday's paper the day before. Oh, well. It's only a good pipe dream.
Yep.
Get your computer fixed, and we'll talk to you tomorrow. Well, good thing you're not trading FOMC anyway.
Yeah.
So it's not a big deal. You're not losing much. All right, man.
Talk to you later.
Take it easy. All right, we're coming up here now to the 83. It's our next level of resistance that we're talking about here. We got up here to 79. There are the levels again in the chat for you, in case you might have missed them. Yeah, I don't know what his intentions were in regards to Twitter, but ever since he's got in there, he's created a very negative uh, environment that everybody's complaining about. Has become more political than trying to stay out. I mean, I didn't think he was so political, but he's become extremely political in his since his acquisition. Kind of a little weird. I thought that, I guess he bought it to become more political. I don't know why he bought it. Doesn't make any sense, but it is what it is. And the his Tesla stock is at a 52-week low. So in case you were looking to jump in on his bandwagon of electric cars, I don't know if the fallout from Twitter is affecting Tesla stock. I don't know if there's a connection there or not, but he's definitely become a little bit more political since he's gone over there. Which again kind of surprises me a little bit. All right, coming up here, a little resistance around the 83 area. All right, we're slowly inching up. Mike, take it easy.